Welcome to Deal Talk, a private equity podcast by Moonfair. Each episode, our CEO, Dr. Stefan Pauls, sits down with leaders from across the industry to discuss their views on the investment landscape, working with portfolio companies, and the lessons they've learned.
So at this time, I'd like to turn things over to Moonfair's founder and CEO, Dr. Stefan Pauls, who will introduce today's very special guest, Lauren Gross. Over to you, Stefan.
Thank you very much, Pablo, and a very warm welcome from my end to our third Deal Talk edition today. Today is a very special day as we are having our first Valley Talk as part of our Deal Talk series. On a personal note, it has been a dream for me personally since my early 30s to be able to invest my personal money into the globally leading US tech funds. And they are inaccessible for new investors, in particular for private investors. But my dream became true as Moonfair managed to get access to some of the best US tech funds globally. In the meantime, and Pablo talked about it, we offer far more than just access to the best private equity funds globally. We had Khosla on the platform, leading US tech fund. We had Vista, we had Insight, and many others. And as we speak, we have outstanding funds on the platform. So take a look if you're interested. And actually, the first tech fund, and that brings together today's deal talk with what I'm talking about, is the first fund we had on the platform. Actually, it was a bit more than a year or so ago. We started with a legendary one, and that was Founders Fund. So this is why today I'm very proud to say that we not only have a very prestigious, prominent personality from the Silicon Valley with us for our first Valley Talk. Even more so, we have actually Lauren Gross with us, who is a partner and COO at Founders Fund. Lauren leads fundraising, but also works with the partnership on key strategic issues and investments. She's known to be Peter Thiel's right hand in the firm. A very, very warm welcome, Lauren. Great to have you with us today.
Thank you. Happy to be here.
It's fantastic. Look, there's so much to say about Founders Fund. The firm is iconic, and so are the companies Founders Fund invested in. I'm thinking of names like SpaceX, Palantir, Stripe, Airbnb, Oscar, Spotify, Facebook, just to name a few. The firm clearly has written history in the Silicon Valley, and it belongs to the most successful and admired tech investors in the world. Before we start a bit on the process, all of you today will have the opportunity to ask Lauren questions. I will kick it off with a couple of questions to get the ball rolling, but we have reserved 20 minutes or so in the second half of the session today only for you. So please hand in your questions if you have those in the Zoom tool. You can do so over the course of the session. We'll also try to integrate into my questions certain aspects and comments that you might have. So please use the tool as much as you want. But now allow me to kick it off, Lauren, and allow me to start the session today with a personal question. Look, you are a shining example of what's possible for women entering the private equity world. What do you attribute to your personal success, and what advice would you give to other women as they enter and climb up the ladder in the technology private equity industry?
Well, first, thank you. That's very generous. I think one thing I learned early from my boss, mentor, and partner, Peter Thiel, is to figure out your comparative advantage as soon as you're able. What are you distinctly good at? What are you comparatively better at than your peers? Or what do you bring to the table at your particular firm or company? Hopefully it happens to be something you also enjoy, and focus on that. Get caught up less in what's popular, what others are doing, what others think you should be doing. Being in venture for over a decade, nearly everyone outside of my Founders Fund team has continually pushed me to become an investor because that's what's been most in vogue. When in fact, I'm surrounded by phenomenal investors across my partnership and full team. And what I bring to the table, my comparative advantages are fundraising and operating. And I've loved focusing on those. So whatever your gender, find your comparative advantage and focus on that would be my answer.
Terrific insight, and thanks for sharing. Look, Lauren, you know that, but for the broader group, an unprecedented value creation really is happening in the technology sector. Industry experts are foreseeing that $6 trillion in market value to be created by tech companies in the next 20 years. And most of this value creation is actually happening in private markets. We at Moonfair, as call it neutral observers of the space, are seeing a trend here, which is that it's becoming more and more commonplace for private companies to stay private for much longer. And at the same time, and this is really me speaking here privately, I would see and would dare to say there's an incredible asset inflation. I would call it value exaggeration that is happening in the public markets. I'm thinking there also of some very disappointing IPOs, more recently Peloton, Uber, or WeWork, that didn't play out. It almost seems that most of the value creation has been eaten up or captured in private markets, and there's not much left more for the public markets. What is, if you agree, behind this trend? And will there continue to be significant upside for those that are investing in your funds?
Sure. Well, we've certainly seen this continued trend over the past, even decade. In fact, one of the reasons Peter asked me to join Founders Fund back in 2010 was because he foresaw this trend of companies staying private for longer, of more of that value being captured by the private side. And he felt Founders Fund was uniquely positioned to take advantage of said trend, given our comfort in taking outsized positions. So I certainly see us, continuing to be able to deliver that for investors. We expanded our platform into Founders Fund Growth last year. So I only see us being able to further take advantage of this trend as we double down more into our winners at growth stages with Founders Fund Growth.
Thank you, Lauren. Look, moving to a very common topic these days, and I'm talking about SPACs. Everyone, is talking about it. There's almost no day where you don't see one floating. Just in March this year in the US, only talking, SPACs celebrated a head-running milestone by breaking into their 2020 issuance just in the first 3 months of the year. And I had another guest here, Lauren, to put it into perspective. Markus Brennick is co-running the private equity firm at EQT. And he was, very skeptical about this phenomenon. Of course, he's a traditional private equity guy, but he didn't see much value in that new phenomenon. How do you view SPACs as a long-term exit road and as they preferred replacement for the old-fashioned IPO, or is it just a second-class route to the public markets?
I think it's a good question and one that's still playing out. I'm unsure I have particularly strong views on SPACs. I will say at Founders Fund, we run a purposely concentrated portfolio, meaning at any given time, there are as few as a dozen positions that comprise 80-90% of our portfolio value and returns across funds. And of those core positions, over the past year, 5 of those names went out. Airbnb, Palantir, Affirm, Wish, Oscar, and all were either IPOs or direct listings, if that's sort of one answer to the question.
Very helpful. Although I saw, that Peter might, but this is, of course, something you can't comment on, merge with a company in Southeast Asia and so on, but very, very helpful. Look, when talking about the investment themes the firm is interested in, and what stands out is that there are 5 very distinct areas that you have highlighted, which is aerospace, biotech, AI, energy, and the internet. So for me, from an outside perspective, quite diverse. And my question would be, what is the common theme, the common thread behind them?
Sure. We certainly have invested in the areas mentioned, though we truly are stage and sector agnostic. And that's largely because we'd be the first to admit it's not as though we predicted social media and then found Facebook, or predetermined there'd be something interesting in private aerospace and then found SpaceX. Generally, it's been quite the opposite. Our willingness to look across sectors, to be open to new ideas, to challenge conventional thinking has led us to the best investments more than a sectorally driven approach. With that said, the singular common thread across all of our investments would be the exceptional founders behind them.
Thank you. Look, your flagship fund, and this is, I guess, no confidential information, has an incredible return profile with returns up to 5x and more. What is driving, in your view, this outstanding performance? And how do you expect this, in light also of the asset inflation I was talking about, private companies staying longer and so on? How do you expect this develop from now onwards? What will be different? What will be the same?
So I think there have been two key drivers to founders funds' continued strong returns. One would be independent thinking, and two would be concentration. I think, over the past decade and a half, we've built our team prudently. We've tended to focus on the individual over a specific role or function. And as we grow, I think it's ever more important for us to emphasize fiercely independent thinking that deeply challenges convention and even our own views, particularly as the industry becomes more saturated with capital and, with that groupthink. The second driver, which I've mentioned a couple of times now, is concentration. I think these two drivers have been true from the onset of Founders Fund, and are only more true today, particularly on the concentration front, because we now have the platform and fund sizes to do so. To state the obvious, it was impossible to write $150 million check into Airbnb when our fund sizes were roughly 200 million. We had to stripe that across a few funds. Now we have the capital structure to essentially write as large of a check as the team deems appropriate. I joined Founders Fund because I was inspired by the group's different way of thinking, and the group's collective willingness to take big risks and make unconventional bets. And I think all of that is still very true today.
Thank you, Lauren. Let's talk a little bit, if you don't mind, about Europe versus the US, and just introducing the discussion or the question here with some numbers. According to CB Insight, end of 2019, we had a total of 211 unicorn startups in the US versus some 52 in Europe. And even more impressive, the US unicorns were standing for a market cap of north of 600 billion US dollar versus 100 billion in Europe. You, Founders Fund, have recently made a couple of investments in Germany and in the broader European ecosystem. There are many people saying here that Europe really has lost already the battle in the past, is going to lose the battle in the future when we talk about AI due to data regulation, etc. But where do you see the European ecosystem in the larger context, and where do you see it going from here?
Sure. Well, it's true regarding Germany. A trade republic out of Germany is one of our newer drivers to the platform. In the past, both Spotify and DeepMind out of Europe were drivers of earlier funds. I would say we've always been opportunistic about investing, and that includes sector, stage, geography. What we do care about when entering other geographies is our comparative advantage. What do we understand about this particular investment that might not be in our home geography that others do not? And why are we well suited to back it? But certainly, if you look at the past sort of decade, or particularly half decade, each year we've seen an increase in deals in our portfolio outside of Silicon Valley, across the States and then the world at large.
Let's talk a bit about your portfolio. And there's one company I want to, spend a little bit of time on it. Look, you have an amazing portfolio. I talked about it: Facebook, Spotify, Wish, Airbnb, etc. But there's one company, and I'm talking about Stripe, which recently closed a round valuing the company at 95 billion, which makes it, I think, unofficially titled the most valuable private company globally. And this is a company, and that's for me the interesting point, where you invested in from Series A, and since then you have continued to back it. And this is important to mention because our research, and I guess you will confirm this, has found out that when it comes to investing, you really have to take a long-term view, and you have to back your best winners over and across market cycles. So staying invested across cycles is very, very important. Could you talk a little bit more about and share how you gained, in this particular case here, describe the conviction in this company early on, and why you were so confident making Founders Fund largest follow-on investments into that company?
Sure. Well, first, one of the core drivers behind our success is concentration. Our team is quite skilled and bold about concentrating capital into our winners. And to be more specific, it's not unusual for us to deploy 100 million, 200 million, over time at cost into a given name, ultimately yielding, anywhere from several hundred million to several billion in exposure in a given name. So, we've invested over 100 million at cost into roughly a dozen names, including Stripe, SpaceX, Airbnb, Palantir, Wish, Endural, Bitcoin, Affirm. I'm missing a few there, but a number of names. And, specific with Stripe, but I think true of all of these, normally this level of conviction begins with the founding team. And this is certainly the case with Stripe. It's an A+ team, both from a vision and from an execution standpoint. And it also happens to be a sector our team, has deep operational expertise in, with Peter as one of the founders of PayPal.
Yeah, yeah. No, this is, I can understand this. When we've talked, when it comes to Founders Fund, and everyone is talking about these great names, the Airbnbs and Facebooks and so on, but can you share for the broader audience a little bit more on the hidden champions? Not like those companies that have made it already to unicorns. So the lesser known investments in your portfolio that you've made and you're excited about, and that have to, equally have the potential to become transformative as all the other companies.
Sure. The next sort of core set of drivers, certainly a handful of those. I mentioned Trade Republic earlier. I would state that again, in your neck of the woods. The overall market for retail investing has seen significant acceleration. So brokerage as a sector, has seen unprecedented growth. And Trade Republic has been one of the most effective in capturing this demand, particularly in Germany and now expanding across Europe. I'd also list Flexport, which is one of our freight forwarding companies, essentially Kayak for freight forwarding. RigUp, which is a labor marketplace across skilled trade industries. Let's see, one other, Fair, which is an online wholesale marketplace connecting local retailers with independent brands. There are a handful of others, but that's sort of a good start.
Terrific. So many, many reasons to stay invested and continue to invest into private markets and tech in particular. So far, thank you so much, Lauren. That was terrific in terms of insights. And for me, really, it's, as I said, an extraordinary pleasure that you are with us today. But now, as promised, let's get our audience involved and let them ask. And Pablo, please take over and call out their questions, because I'm sure there will be many, many more over and beyond what we've discussed so far.
Lauren, how can you differentiate visionary entrepreneurs from founders who might be, let's say, a little bit delusional?
It's a good question. It's a great question, actually, and I think it's there's a fine line, right? Like you need to be a little bit crazy to think you can build a multi-billion-dollar company, a tens of billion-dollar company that no one else has been able to. Um, I think the probably short answer would just be pattern matching. Our team has done this for a couple of decades now. We have seen um, hundreds of thousands of companies, and over time, you start to refine that gauge on what is just crazy enough versus a little too crazy.
How does Peter Thiel's emphasis on the power law distribution of returns and venture capital impact founder funds approach to portfolio construction?
Pablo, just intervening, if you could speak up a little bit more because I hardly can hear it.
Sure. I think the question was regarding power law. And I think the answer is, one that I've probably stated a few times now, concentration. We do believe it is true that the top 1, 2, maybe 3, if you're lucky, 5 names drive the fund's returns. What we've also found in the industry at large is capital is not allocated accordingly, meaning as an early investor, you should have insider advantage on, where are things really working, and you should be doubling, tripling, quadrupling down into those names. And that's certainly what we have done as a fund.
Could you talk a little bit about what it's like to work together with Moonfair? Someone is asking, why does a access-constrained USDP like Founders Fund want to work with a fintech with a footprint in Europe and Asia on fundraising?
Sure. Well, I think we've been in a fortunate position to be substantially oversubscribed for our funds, so we can be very thoughtful about our LPs. I think, we've always tried to be thoughtful about diversification across type, across geography, and certainly Moonfair has, a specific reach that being based in California, we might not have access to.
Another one here. What role does seed stage investing play for Founders Fund at the moment?
An important one. We allocate a few percent of every fund, which, when you're at the $1 billion plus scale is real dollars, into investments that are at cost $1 million or less. And it serves a few purposes. One, I think it tells founders they can come to Founders Fund at any point in time, that even at a multi-billion-dollar scale, we want to see things early. And hopefully some of those translate into, follow-on investing for the fund. And then I think outside of that direct benefit, there's also indirect ones where it helps us get knowledgeable on a sector that might be new to us. It helps us expand our network. Oftentimes that particular deal hasn't led to a core Founders Fund investment, but it might have led to important research that led to one, or connected us with another founder that led to one, and so on.
Let's do another one here. Are there any specific traits that you look for in founders? What do you think separates successful founders from the rest of the pack?
I think for us, and this is probably not true for everyone, but we certainly invest in entrepreneurs who are extraordinarily ambitious, bold in their visions, and generally seeking big and real change. I think our tagline back in the day was, we wanted flying cars. We ended up with 140 characters. And that wasn't meant to be a direct knock at Twitter. It was meant to be more commentary on venture at large and how much of the industry was lookalike, risk averse, largely backing incremental technologies versus transformational ones. And so, our largest checks have gone to founders and companies with really big visions and the ability to execute on those visions, whether it was combating terrorism, colonizing Mars, curing cancer, long before they became mainstream successes.
We have a question about blockchain. What's your view on the recent DeFi explosion? Will it reach mainstream adoption?
Sorry, I couldn't quite hear that one. Something about crypto. I think I heard a question about Bitcoin or crypto. I think I'm not sure I got it specifically, but in terms of Bitcoin. It has credit to the team. It's something we've started investing in early. So while it's very topical today, we wrote our first investment into Bitcoin back in 2014, 7 years ago. And credit to our LPs, they enabled us to do that. It was unusual at the time for investors to be on venture to be investing in currency, Bitcoin specifically. And then we built a very solid position there over the years, while also realizing gains at local peaks.
Okay. As a VC, how do you pitch yourself to startups? What do you bring besides just a big check?
I think a few things. I think one of the things I would lead with is in the industry, there is a lot of, in our view, false promised value add, this sort of capital plus model where investors promise all these things. And I think instead, our view is it's your company. It's the founder's company. Facebook is Facebook because of Mark Zuckerberg and the rest of his strong founding team. SpaceX is SpaceX because of Elon Musk and his surrounding team. And we would say the most important thing we did was wrote a check in the early days when others wouldn't. And then we're really there for support and strategic soundboarding. But it really is the founder's company. And in our view, there's a selection bias where that attracts sort of the top founders. So that's sort of what we lead with. I would say in addition to that, yes, at the end of the day, a lot of our partnership and team has a very strong operational expertise at, billion-dollar plus companies. And we bring that to the table as well.
Okay, there's a question that is maybe particularly interesting to hear your perspective on. Someone is saying that less than 2% is invested in businesses led by women, and how do we overcome this as an industry?
Certainly, the gender ratio is still egregiously off. That's true across the board. It's true from venture and the venture industry as well. So you don't have as many females looking at businesses, and that sort of skews what's being funded. I think that's one area of the problem to solve. I don't know if I have a specific answer to that. I think my personal answer to it has just been being a woman in venture and hopefully being, a good example of one, and always happy to encourage others.
Kind of on that trope, are there any areas that you would not invest into for ethical reasons?
No, we're pretty. I don't know if there's a specific. We're pretty open. I think ethical has is sort of a trigger word for some, and I'm not sure. I think specifically, we've often been ahead of the curve, right? So this isn't maybe an ethical answer, but I remember when we first invested in SpaceX, over a decade ago, people thought it was insane to back a private rocket company. Or when we first invested in cannabis, over half a decade ago when it wasn't on the radar, that sort of brought up is that ethical question. So I think we're certainly willing to push the boundaries. I'm not sure I would use the word ethical to describe that though.
Okay, let's get back to finance. How do you think about how much capital to set aside for follow-on investments?
Yeah, it's admittedly more of an art than a science. We'd be the first to admit that it's an imperfect exercise. I do sit down with our CFO once a quarter, and we go through the full portfolio with input from the investment team, on our best guesses. I think with Founders Fund, one thing that we do that's unusual is we don't necessarily do our pro rata. That sort of is the industry default. And if you're doing it that way, it's much easier to map, right? I think to steal Peter's verbiage, pro rata is lazy intellectual thinking. It's very unusual. We feel exactly the same about that company as we did the last time we invested in it. And so we're almost always doing double, triple, quadruple our pro rata, or super, super pro rata, or sometimes not investing. And we're very direct with our companies upfront about that if things are working, we will be the first to double down. And if things are not, we'll be harsher in cutting. And I think, again, that selects the strongest founders in our view. But it does make that mapping harder, because sometimes it's 300% of what we've done to 0%. But in aggregate, if it's helpful to give an aggregate answer, it's probably roughly 30% of any fund is for that.
Okay, we talked about earlier, Stefan was asking in your opinion about companies staying private for longer. Given this, do you see more robust secondary markets and private company shares developing?
We certainly have. I think we've already seen that. I think the secondary market, when I started, it was really a place for de minimis liquidity, maybe for, a team member to get, sub $1 million trades. And now you're really seeing hundreds of millions happen in that. I think with that said, companies are also getting savvier about it. I think in the early days, it was relatively unregulated by the companies. You could trade what you want to trade, and now a lot are requiring company approval so that the company can control the price. But yes, it's certainly an industry that we've seen develop over the years.
Okay, on the subject of returns, what kind of IRR does Founders Fund target in general? And what kind of loss ratio are you okay with? And how do you think about these metrics inside the fund?
So I want to be thoughtful about what I say on returns, but we focus more on multiple than on IRR. And in every fund we are looking for 5x plus. We've been very lucky to get that. Even as our fund sizes have grown, that is still our internal target. On loss ratios, I think again this comes back to the concentration piece, and I think one stat I like to throw out is our largest investment to date was roughly 300 million into a given name. And as I mentioned earlier, there's roughly a dozen names where we've put over 100 million at cost. Our largest loss to date is 20 million. So we've really capped those losses very, very well. And simultaneously, where we've gone big, we've gotten those right. And that's crucially important.
Mm-hmm. Getting to the core of the company, how do you source GP talent and kind of avoid groupthink? Is there anything special you can share about your hiring processes?
I credit Peter for a lot of this. He really is, one of the godfathers of independent thought. And I think that's something that comes, very innately to him. And so it's certainly something he focuses on and screens for. And, in growing the team, there are exceptions to this, but for the most part, we have groomed our team in-house. We've been less inclined to hire from industry. And the majority of the team, has started as an intern, principal, or associate, and we have sort of groomed them in sort of the Founders Fund way over the years.
Mm-hmm. So we'd like to ask sometimes some challenging questions. So obviously, when things go great, that's wonderful. But what is your strategy if you recognize that an investment is not going the way you had planned?
Again, I think this is where the capping, where the team has been excruciatingly thoughtful on where those larger dollars have gone. We've been fortunate to get those larger bets right. I'd argue one of the reasons for that is we are our own largest investor. That's unusual for the industry. Oftentimes you see a 1% to 2% GP commit. We have hundreds of millions of dollars from the GP and partnership at large and team at large in every single fund. And I think that really makes you all that more thoughtful on where those incremental dollars are going. And it's not to say things haven't gone wrong. There's plenty of times part of the model, especially not in our growth fund, but in our venture fund, you expect a large number of those companies to fail. And if they're not, you're probably not taking enough risk. And so we're very risk tolerant, but we try to be very thoughtful about the follow-on dollars.
Okay, we have a question about the Chinese market. Would you invest in opportunities in China? And if so, how do you source opportunities in emerging markets these days?
So China specifically, we've done extremely little. I think I mentioned this earlier, but in geographies, we really like to understand our comparative advantage. What do we understand about this area that others don't? How versed are we in the jurisdictional risks and the regulation risks? I don't think we would say that about ourselves from China. So we have not played there. There are plenty of local players there if people want exposure to China. And then I think idiosyncratically, as the brand has grown, it's been great to see sort of the brand recognition we have now that we didn't always have, honestly, across Europe and other geographies where we do opportunistically invest.
Okay. A little future gazing here. Could you highlight any industries or themes that you think are especially attractive in the next years?
So I think this answer would be very partner specific at Founders Fund versus firm specific. As I mentioned earlier, we do not allocate capital by sector. Every fund, and that's because we'd be the first to admit we didn't call it that way. Fund one was really driven by Facebook. And so you could have called it like the social media fund, versus fund two was really harder tech leaning. It was driven by SpaceX and Palantir. Fund three had a really strong AI bet in it. Fund four was sort of share economy with Airbnb and Lyft and so on down the scale. And that's not predicted at the onset. That is just how it is played out. With that said, we certainly have partners on the team with varying degrees of expertise in areas of interest that we encourage individuals to pursue. So, as example, one of our partners, Trey Stevens, has a very deep background in government and security and defense, and that's been an area of focus for him.
Thank you. Maybe one last question, and then I'll turn it back over to Stefan. There's currently a lot of talk about hedge funds disrupting the VC market, especially at the growth stage. How do you look at this evolution?
I think this is true across the board, where you're just seeing more platforms than you are sort of individual stage focuses. So you're seeing people move up the scale, right? Ventures moved up as well. We've admittedly moved up as well into growth. And you've seen on the growth side, it come down as well. So it's just more of a flow across.
Great, thank you. Stefan, the floor is yours.
Look, there are so many more questions from the audience. And of course, I also have a couple of more. But one or two I really want to ask you, Lauren. And there's one very specific thing that I found striking when it comes to deal making or decision making in the firm. Now, most venture capital firms, and I know it from the private equity industry, they have this majority or super majority approach and vote by general partners when it comes to decision making. At Founders Fund, I understand that 3 people are really making the decisions, and everyone has a veto power, so to say. 2 questions. Why have you set it up this way? And I read it, I think, in one of Peter's books, but would be great to hear it from you. And can share any stories where have there been ever a disagreement where Peter said, this is a deal I really want, and then 2 others raised their arm and said, look, I'm veto against it?
So perhaps the book was not quite accurate. I think if anything, we run a more democratic structure than most. We have a lean team, roughly, anywhere from 10 to 15 people on the investment team, and every team member has a voice at the table. If I were to describe our investment discussions, they would be process light and content heavy. We care far less about checking various boxes and more about, did the team members with the most relevant expertise meet this company? Was there sufficient debate? Was there good pushback? I've seen us come to investment decisions in hours, and I've seen it take months. And it's largely dependent on factors, including how well do we know the team, how well versed we are in this sector, and then, of course, big one, check size. And on the check size note, Founders Fund is somewhat unusual in that we write $1 million checks and $100 million checks. And neither of those is a minimum or maximum. And we scale voting accordingly. And so, for example, and this sort of speaks to the question, like investments of $1 million or less require any 2 members of the investment team, any 2. Whereas when you get to the larger check sizes of 50 million plus, that requires the majority of the partnership.
Got it. Very helpful. Look, Lauren, as I've kicked off today's Deal Talk session with a personal question to you, allow me to finish the session with my final question, again, a personal one. So if you had to summarize so far your time at Founders Fund in one word, what would it be?
Fascinating.
Terrific. Thanks so much again, Lauren. It was great to have you with us. And dear audience, before we conclude, allow me to hint you to our next Deal Talk event. And this will be, again, really with an extraordinary guest from the industry. And I will have the opportunity to get his views his inside views on the private equity industry. It will be with Kurt Björklund, who is, since earlier this year, Permira's global managing partner. He serves on the Permira Holding Limited Board, the Executive Committee, the firm's Operation Committee, the Portfolio Review Committee, and so on and so forth. And he co-chairs the main funds investment committee with the firm. So a very, very senior person from the industry. And he will be with us on May, as you see, 18th at 1 p.m. CET. So if you are interested, please sign in. You will find the link on this page, but also in the chat room. And with that, let me conclude and really let me thank you again for your attention. It's terrific to see how many people have dialed in. Stay healthy, and hopefully I have the chance to welcome you soon again at our Deal Talk series. All the best.
Thank you.
Thanks for listening. For more episodes, search for Deal Talk wherever you listen to your podcasts. Want to know more about investing in private markets? Visit moonfair.com.